Hello everyone, welcome to yet another special conversation about the Indian markets. I'm Singhania and we have Mr. Sunil Singhania, the founder of Abakkus Asset Manager. We are truly excited to know about his views on the current market landscape. So welcome.
Thank you.
And so the last 12 to 14 months have been very challenging for the Indian markets. We have seen a lot of headwinds, but now it has been like settling down. So how do you see the Indian markets shaping up?
No, I think you're right. Ever since the markets hit a new high somewhere towards the mid 2024, we have seen many headwinds. We had a slowdown in Indian GDP growth rate, and as a consequence of that, we also had very low corporate profit growth rate. I think a major portion of that was also because we had general elections in mid 24, and things do get deferred a little bit. I think we are coming out of it. We also had multiple global headwinds, currency fluctuations, mini wars, multiple places, including India, Pakistan, Israel, Iran, Russia, Ukraine continues. And last but not the least, we have had uncertainty pertaining to the tariff front. However, I think things are panning out well. We have had a liquidity infusion in India. Monsoons have been good. Growth rate is slowly picking up. And even on the world front, except the tariff last bit, things are settling down. So we are increasingly getting more constructive as we move forward than what we were over the last 12 to 14 months.
So we are at the end of the quarter one of FY26. How were the result seasons for you? Any key takeaways?
So result season has been okay, not great, except that the expectations itself are low. So compared to the expectation, result season have been slightly better. But if you just go back 3-4 quarters, September 24, corporate profit growth was only 3%. December corporate profit growth inched up to 5%. March Nifty profit growth was 5%, but general corporate growth was almost 8 to 9%. And June also we are inching up to 8-9%. So I think things are slowly improving. We would like them to be improving much faster, but there have been uncertainties. Our view is that September 25 growth rates for earnings will be better optically because last year September 24 was a really bad quarter. But the big move up as far as Indian economy and corporate earnings growth is concerned will be in the second half of FY26, a consequence of hopefully tariff issue also getting sorted out and the impact of the huge liquidity infusion which RBI, the Central Bank of India, has done over the last 7-8 months. So look forward to a much better H2 FY26.
So as we all know, Trump has imposed a 25% and an additional 25% tariffs. So how do you think it's going to affect the overall Indian markets and some key sectors?
No, I think no one in India expected 25% tariff because India and US have had great relations. The leaders of both the countries have had great relations. So this 25% tariff came as a shock. We were just about absorbing the shock and there was an added 25% punitive tariff which was imposed. That tariff comes into effect from August 27. Before that, there are a lot of parlays going on between the two sides to solve this issue. A delegation of US government is coming to India on August 25th for the 6th round of talk as far as tariff is concerned. For the first time since Trump took over the presidency in his second term, he's going to meet Mr. Putin. And I think as positive investors and positive human beings, our view is that there will be some resolution as far as tariffs is concerned. Having said that, obviously, if the issue does not get sorted out, then there will definitely be some sectors which are more export oriented, which will get impacted. But I would still say that let us not jump the gun. Let us wait for another 2 weeks. Hopefully, this issue will look less frightening as it is looking now.
So how much of an influence do global factors like US interest rates and oil prices have on Indian markets?
I think the world is integrated very clearly. What happens in one part of the world impacts all the countries. US interest rates, if it goes out of hand, obviously will have a major impact because US is the biggest borrower in the world, $37 trillion of debt. and any increase in interest rate will have an impact on their finances, and their finances will therefore obviously have an impact globally also, at least in the near term. Currency movements also depend a lot on this, and therefore we have to be cautious about it. Oil prices for India, I think it's a godsend, factor which is happening right now. Oil prices have already corrected to somewhere in the region of $65 to $67. India remains one of the largest importer of crude, and therefore any reduction in price is a big benefit to the Indian economy. And our view going forward also is of a stable to softer oil price, given the fact that the world is not growing fast, so the demand for oil is lower. And now with the advent of solar and other renewables, plus hydrogen and a lot of other innovative things, the demand for fossil fuel based energy sources, including oil, will be lower. So lower oil price definitely is a big positive for India.
So which sectors do you think have the most potential in the next 3 to 4 years?
I think we continue to like financials. Financials are, inversely correlated to interest rates, and interest rates in India have been going down. We have already had 3 rate cuts totaling 100 basis points as far as interest rates in India is concerned. And it has a positive correlation with growth rates. And we do expect growth rates in India to move up to maybe 7% and above. So I think given both these factors, we continue to be quite positive on financials, including fund-based as well as non-fund-based financials like asset management companies, wealth management companies, and insurance companies. Despite the tariff threat, which keeps on coming up, we continue to be quite positive on Indian pharma. I think companies are doing good work. Growth rates are pretty decent, double-digit growth rates. Companies have become quite efficient and large. So I think that is one sector which we like. Other small sectors which we like include, some metals, chemicals, engineering. So I think India is a stock picker's market, a lot of opportunities across sectors.
So as we know, small and mid-cap segments have seen a lot of challenges in the beginning of the year. So how do you think it's shaping up? What's your view on that?
So, you have to look at it from multiple perspectives. 2020 to 24 was a great period for mid and small cap. The returns were really, really great. Our funds also went up 3-5x depending on the time horizon. We have had a little bit of challenges, particularly since the tariff was announced, and we had deep correction in January, February, right up to April. Since then, I think stocks have stabilized. We do believe that from a 3 to 5 years perspective, mid and small cap will do slightly more than the large caps in terms of returns. However, the kind of differential returns which we used to see earlier, that will narrow down. So maybe, if large caps do 10-12% return over 3-5 years, mid caps can be 3-4% higher than that.
That was very insightful. Thank you for sharing your opinions and helping our investors understand the Indian markets better.